These are some of the strategies that are included with the money management algorithms. They're open code strategies. VIX swing is one. I'll show you these. I've updated these in this video to show you how to use them with the degradation algorithm. We look for a consistent type approach to apply these strategies, and taking a look at buying dips in the equity curve and selling rallies is one of the best ways in our opinion. If you look at this, this is the original, this is the VIX swing. It does not have a stop loss in it, and so that was back in February, the market, or January, when the market VIX spiked. It's recovered since, but it's currently in a trade and it's sitting at a big loss. Currently, we use this strategy with a $3,000 stop loss in the portfolio. One way you can do it is also in the money management algorithm. You see that there are some recent trades. Since this strategy on the left is long, the money management algorithm will try to pick pieces out of this. And so one of the ways you can do that is with the degradation algorithm. And here is the performance summary for that. This is an overnight strategy. It uses $1,000 stop loss, $1,000 profit target. And I'm going to show you the settings for this degradation algorithm. So these are the settings, and you scroll down, limit entry. These are the setups for the chart stats on the left. ES 60-minute bar, trading one contract, and we go in the pinpoint entry algorithm, and we rule 12, and so we wait till it goes into a $350 loss on the trade, and we also wait for this to be in a $3,000 drawdown, and we stop when it's in a $2,000 run up. These numbers can vary based on how big the max drawdown is in the original strategy. If you have a strategy with a $4,000 drawdown, you probably want to use 1,000 and 1,000, the way we did in Cobra Ct. But if you have one that has a $10,000 or $15,000 drawdown, these numbers, you want to pick a bigger number. And so this strategy on the left is in a $3,000 drawdown, and so you can see it's been taking trades here recently, and we don't use, it's a swing trade strategy that holds long term, so we don't use a lot of the original system parameters. We use $1,000 stop loss, $1,000 profit target, and we do not sync the exit with the master because we're just taking pieces out of this longer term strategy. So especially when it's in a drawdown, and that's when we start. And so that is a setup for the degradation algorithm for VIX swing. And here you see some of the recent performance. Now we're going to go back to Cobra Ct 5B. The degradation algorithm that we're using for Cobra Ct 5B was using a market order. And so we're not using a market order. Originally, we did not use a market order. Originally, we used a limit order to get at the lowest low of the last 12 bars on a 3-minute chart. That's 36 minutes. And so you can see the original strategy. This is actually the original strategy, but if you use market orders, some people like to use market orders instead of limit orders, but this is the limit order approach to Cobra Ct 5B in the original setup. And here is the equity curve. And by the way, this degradation algorithm is not designed to only take advantage of a equity curve that is pulling back a little bit or rolling over, but it's designed to take advantage of the strategy. It's not going to make as much money when the strategy goes straight up because you're waiting for a drawdown. But it's also conservative because it will work to take advantage of the equity curve when it's going up more conservatively, so that if it rolls over, it won't. It will be more conservative and buy those dips and sell those rallies. So that is the actual Cobra Ct 5B original with the limit orders, whereas we talked about the market orders yesterday. Now this is the degradation algorithm, the same exact degradation algorithm that we used yesterday. Applied to the original strategy, you get 101 average trade profit. It only has $1,000 drawdown. This is extremely conservative. It has a very tight stop loss, and if it has more than one loss a month, then it stops for the month, and so it doesn't. There's long periods of times where it doesn't trade. 2.5 profit factor. Here is the equity curve that we all like. We only wish that we had an equity curve that was this way every single month instead of over a 13-year period. So, but anyways, that is the way you set up the Cobra Ct 5B degradation algorithm with a limit order. I'm going to show you the settings for that. So when you format the strategy and you take a look at at the inputs, you see the limit entry there. We're looking at the pinpoint entry algorithm and the buy the drawdown. And so the pinpoint entry uses $50 again, and the buy the drawdown, we buy at $1,000 dip, sell it at $1,000 rally, and then we use the same inputs as yesterday on the market order version. And so the market order version will trade more frequently than the limit order version. So once again, that's the latest. Those are the latest results for the degradation algorithm for the Cobra Ct 5B. Now we're going to take a look at Cobra Ct Euro. Here's Cobra Ct Euro. Currencies are not my forte in the recent years. I've not focused on them as much. But this is an example of the degradation algorithm on that. And here is the base strategy. Not very good, but what can you do with that? And you see an improvement in the strategy, still not as tradable, but in theory it further proves our degradation algorithm approach. And so I wouldn't necessarily trade this strategy as it is, but it's an example of the degradation algorithm on the currencies. And again, currencies are one of the markets that I haven't focused on as much in recent years as the ranges have narrowed. I'm going to show you the settings for this. So here it is, the inputs, limit entry. Scroll down here. Using the pinpoint entry and the buy the drawdown rule 12. So the pinpoint entry is set at $50. Buy the drawdown is set at 1,000 and 1,000. Same parameters really improve this strategy. So there you see the inputs that we're using, and again we continue these workspaces when you get the money management algorithms, or if you have the money management algorithms. Next we're going to look at a 15-second Cobra DAX strategy. So here is a what I call a 15-second Cobra DAX strategy, and you see the results here. Again, the base strategy not that great, but when we apply a degradation algorithm, it improves it. And so we don't have as much data for this. We haven't tracked this as much, and so but it is one example. I'm going to further test this because now that we have more volatility, I like the potential for this type of strategy. So I'll be researching this type of strategy more. Let's look at the degradation algorithm. The degradation algorithm improves this strategy. It trades much less frequently. Again, this is only 6 months of data because we have less data on sub 1 minute charts, and so it's just a strategy that uses data 1. We're not using any sub data, data 2 or data 3. So I'm going to show you the inputs for this. So here are the inputs. Limit entry is what we're using here. We use the pinpoint entry. We add rules 8 and 9 as well, as we've used that before in the NASDAQ, and so we use that in the DAX and as well as rule 12. So the degradation algorithm uses rule 12 primarily, and then it can use rule 6 or a combination of rule 8 and 9 or both. And so you see rule 6 is set at 50. Rule 8 and 9 is 20 and 40. We're not optimizing and getting down to incremental numbers like 23 and 47. We're just we basically test 10 and 20 or 20 and 40 or 30 and 60. And then we're talking about the DAX, so we expand this out a little bit, 3,000 and 3,000 on the drawdown start and drawdown run up or stop run up. So that's the update for the degradation algorithms, using the money management algorithms and further validity for an approach that buys the dip in the equity curves and sells the rally. And I call it a degradation algorithm. And I want to make sure that you understand one thing, is that it's a conservative algorithm to trade, to take advantage of and to be more risk averse when an equity curve goes sideways or down. But it can take advantage of that, but it can also take advantage of a system that's doing well. It just will be more conservative if you wait for a drawdown in the equity curve and get out on a run up. And so you see that in this strategy that we've had for a very long time, with 71 average trade profit over here on the right, and then over here you see the degradation algorithm. You boost that average trade profit, but you vastly reduce the number of trades and net profit you really reduce the drawdown, but really nice equity curve. And so again, the degradation algorithm is a conservative algorithm to help you out, reduce risk in your trading. And these are some of the results that we found when testing it on the current strategies that come with the money management algorithms.